Welcome to Falcon Forward. My name is Peter Brecht. I'm here with Mike Tangy. Very excited to get into today's topics. Mike, I know before the show we were going over a couple things, but before we kick things off, how's your week going, and what are you looking forward to?
A week is going great. I am looking forward to seeing my daughter, who is a sophomore in college tomorrow.
Awesome. Very exciting to see family and yeah, I know your kids are doing very cool things in the world. So got to be fun to see them and catch up as much as you can. Well, today, so we're still working on figuring out the format of our show, and like so far we've done everything from current events to interviewing somebody to so as we kind of pull the thread, the only common thread we have right now is it's all around insurance, right? So, but one thing, and as we were kind of going through things during the pregame, was some current events, right? So I'm gonna pull this up real quick. It was pretty intriguing. I hadn't heard of this, and I feel like I'm fairly well connected, in this crypto space, at least to some extent. But I want to give some context. So there's an event that just occurred with a company in South Korea called Bithumb. And before we get into Bithumb and what's going on there, I want to just give a quick background on the color of the Bitcoin market. So Bitcoin has been sort of this, I guess it would be, freedom money is how a lot of people say it. Other people say it's sort of a fraud scheme, and I can see both sides of the conversation, right? And it's been very, again, it had a very jaded past. So like in 2014 there was an event called Mt. Gox. There was an exchange, so think of it like a bank that handled about 70% of all the Bitcoin trades, based in Tokyo, and they lost in quotes 850,000 Bitcoin. Okay. And the reason was later on that they hadn't lost it. It had actually been hacked and removed from the exchange. And basically Bitcoin at this point almost died. Like no one wanted to buy it anymore. It's okay. There's hackers that were able to access and all that. Fast forward to 2016, there was another one with a company called Bitfinex, right? And there's something called multi-signature, but effectively 120,000 Bitcoins were stolen at that point. And it was actually a couple, that husband and wife, that stole the Bitcoin and was able to get away with it. They actually got caught, had to pay it back, but a lot of stuff going on with that. There was another one. There was a CEO that pretended he was dead and like stole all this Bitcoin with him and took him to the grave. Turns out he wasn't dead. He was just kind of recreating his identity elsewhere. And then the most recent one was in 2022. I don't know if you remember, like we're all watching this kind of happen because COVID was still going on, but this, and Bitcoin like went through the roof along with all these other altcoins. But this guy named Sam Bankman-Fried ran a company called FTX, and what they were doing effectively was saying that they had a certain amount of Bitcoin in their exchange that didn't actually exist. So there was an $8 billion hole in their balance sheet, right? So as I'm going through all of this and I'm looking at this company in South Korea, again, going back to the current event, this is not new, right? But what I want to understand from you, and I'll set up and tell you what the premise is here. How does insurance respond to something like this? Would it at all respond to something like this? And then, what are your overall thoughts? But here's what's happening in South Korea. So Bithumb had 620,000 Bitcoins. Okay. So as of today, it's worth about $43 billion. Again, Bitcoin's gone from being worth $126,000 in October of last year down to about 70,000 today. Right. So there's this big drop, and 80% decreases are nothing new, but it's been a rough time if you're, significantly invested in Bitcoin. Their plan was, right, they wanted to incentivize people to join their platform and become a trader on it. So they said, hey, look, we're going to go ahead and give you guys $2,000 of, I forget the name of their currency
The
there.
Korean one.
The Korean won, yeah. So $2,000 Korean wons, which is about $1.40 if you convert it to USD. Instead, what they did was they sent everyone 2,000 Bitcoin. So imagine getting, $1.40 versus $2,000 in Bitcoin, right? Or 2,000 Bitcoin individually. So multiply that by what it's worth. They figured out really quickly what they had done. So it took them about 35 minutes. They recovered about 99% of the funds but about like 1% had figured it out that they got it and they started selling it immediately, cashing out and just trying to keep as much as they could. So obviously, the governments are not taking kindly to this because they have seen these schemes have kind of recurred thematically with Bitcoin in the past, right? So they're not happy with it. But I'm curious your perspective on something like this because again, it just keeps happening. I look at it as kind of I don't know, it feels fraudulent, but also it feels kind of clownish. Like I don't know how else to put it. Like it just feels unnatural what you can do with money these days. But I'm going to turn it over to you for the maybe the higher level insight. Maybe insurance plays into this a little bit.
Yeah. So it is. Uh, there's a funny line in The Simpsons where Homer Simpson goes, "Oh, this is really funny because it didn't happen to us,"
Right.
meaning that easy to laugh at other people's mistakes
Right.
or misfortune.
Yeah.
So a number of things come up. So the biggest is just their systems. So you mentioned like they gave away 620,000 Bitcoin. They
Hmm.
didn't have that. They
Right.
had, their customer accounts were something in the neighborhood of 50,000 or so Bitcoin, but that's customers' Bitcoin. That if you're a bank, that's segregated, and you got to have reserves against that. You can't just give all that away.
Yeah.
So they gave away like, and I read that on their balance sheet that they only had a couple hundred Bitcoin of this company. So the error was, if you just imagine like a big bank being like, "Hey, we have $1 million in deposits, but we're going to give away $60 million today." So like your system should not allow that. And then furthermore, if you look at, okay, it was an error, right? So an employee was basically distributing 620,000 Korean won. And I'm guessing like from a drop down menu or he typed in or something, select which currency you're doing this in. And instead of having to be the one, it's instead Bitcoin, which obviously there's a major difference between the two. Instead of $400, it's $40 billion is what was given away. So the fact that an organization that would have the ability to control levels of money. In this case, they can give away something that they didn't have, because ultimately, if they wouldn't have been able to reverse this, who's going to be on the hook for that? Obviously, this company would go into bankruptcy immediately. And then, you have some people who are on the other side of that transaction. And to me, I don't know who that would be, but that would be an interesting thing to see. Are there counterparties if that money was truly gone? I'm going to profess ignorance in the Bitcoin world that I don't know who would be on the hook for that, because it's a little bit different than a regular currency like U.S. dollars or something like that. But obviously, big problem right there. And then the fact that you're controlling that level of money, but you don't have the system set up to do that with, not just computer systems, but then oversight and people signing off. And, the ability that someone can just type something in and poof, it's gone in the tunes of billions of dollars would not give anyone comfort that their money is well taken care of on it. So big issue there.
Yeah. It's I mean, obviously with the FTX scandal with Sam Altman-Fried, right? So the thing there was like $80 billion wasn't really ever recovered, right? So that's part is like you're involving yourself in a financial instrument, let's call it, that may or may not have backing. Now, don't get me wrong, there's good actors in this space too, right? River, I know there's a company called River where you can buy it, and they do something called one-to-one. So for every Bitcoin that is on their exchange, they actually hold it in cold storage. So, and you can go verify that, right? It's a public ledger. You can go look at it and see how it all works. But plenty of these schemes out there, and it really comes down to me. It's like it's a marketing thing, right? They're just, I don't know. I think having a financial incentive as a marketing piece is, I know a lot of marketing comes down to that, right? Like everyone wants to buy the car when there's a discount, but it's like, I don't know, buyer beware, right? Um, on that at least. So.
100%.
Out of my curiosity here, how would insurance like there's I doubt you could insure a mistake like that, even though it is perhaps a drop down menu. But whether you're clicking the wrong thing in USD or Bitcoin, or it doesn't really matter. It's like it's user error. How does that have any weight in this at all, or is it just like no, it's a promotion, like we're out?
Yeah. So you'd have to look to see, because a lot of policies will it exclude anything related to cryptocurrencies just because it's insurance? It's just too much of a wild west for insurance companies to get behind. But if if you have the assumption that there was no exclusion for cryptocurrencies, then you'd look at a crime policy would cover the mistakes of an employee under like its cyber provisions. And this is, you can see where insurance companies have gotten hurt on these policies because effectively this employee under, he wasn't intending to, but he gave away something, he willingly gave away money on it. And that is an insurable loss under these cyber policies. So a lot of insurance companies have gotten hit on cyber claims that they never expected because, you couldn't do that with just pure dollars, sacks full of dollars type things. Uh, it's not feasible. But in this case, with a click of a mouse and billions of dollars can be gone. So you certainly could insure against something like that on a good cyber policy. What would also come into play would be for customers who said, hey, I sold based upon what was going on in the market and I've lost dollars here. Professional liability policy, errors and omissions policy would cover something like that. So there's a potential for different things to apply if you have it. You could also look at, that loss of future customers as a result of this could come into play. So there's a number of insurance coverages that could apply in these instances: professional liability, crime coverages, cyber coverages, business interruption coverages, but be tricky to see if anything related to cryptocurrency would get covered.
Yeah, agreed. And it's insure like there's this interesting thing so working with like oil and gas companies, right? And we interviewed on my podcast, Local Energy, a guy that does Bitcoin mining. So basically they're hooking up these Bitcoin miners to the flared gas that comes off out in Midland, Texas, and all over the country really. But they're mining Bitcoin using this waste product, which is super fascinating. Like I got really involved in the conversation, but they're able to, like, these companies they'll insure the equipment, right? So they'll insure the mining rig that's out there on site in some of these remote locations, but they're not insuring the Bitcoin. There's a couple companies that are working with Lloyd's and coming up with some really creative ways on how to insure that part of it. But again, verifying everything and the cryptography involved is pretty fascinating. So I don't know. We have to get a Bitcoin specialist on here at some point to like tell us like how it all works. But again, it might be too technical. It's a lot of information, and there's enough out there if other people want to go look it up. So,
Yeah.
all right. Well, that's our current event of the week as we try to figure out the common thread here on the direction of this podcast. So let us know what you guys are enjoying or interested in hearing more about as we're going through this too. It's helpful to sort of get a feel for it. But so the second topic, and then we'll jump. I know we have client meetings and other things that we want to attend to today, but there's this sort of, so let me back up a little bit. As I was getting into my insurance career, there was sort of this choice of being a generalist or a specialist. And I talked to a lot of people that were like, oh, the generalist way is great because you can talk to everybody. And the other side of it was like, no, if you become a specialist in something, it's easier to grow a book. It's easier to know who to say yes to or work with. And you can just, in general, sort of have this like, there's a faster growth or inflection point because the idea is you learn an industry really well, you become an expert in the coverage, and you can talk about it all day long the same way every time. There's a real pattern to it. Whereas if I'm talking to a biotech one day and then a coffee shop the next, right? It's a different conversation, or it can be. So the other pushback, though, and this is where I'm sort of want to enroll your expertise, is the concept that if you're a specialist, you are sort of signing yourself up for, I guess, greater E&O danger because you're professing to only focus on one particular type of industry and coverage. And so if you don't know that coverage really well, intimately, as a specialist should, you could be held accountable to it at a higher standard. So that was something like 2 years ago that I thought about, sort of dismissed it because my thought was, well, I want to be that expert that's in it. But what are your thoughts, having been in this industry for so long? Like, it is saying you're a specialist going to increase your chances of an E&O claim?
Yeah. So great question, Peter. Interesting to think about the different pros or cons of each. From a E&O perspective, I would be pretty dismissive of someone who says, well, don't profess to be a specialist out of a fear of increasing your E&O exposure. E&O is your professional liability. So basically, if you don't do something you should have done, or you do something that's wrong, and a customer ultimately has an uncovered loss, that's something that can trigger an E&O claim. And Falcon West, 45 years in business, knock on wood, has never had an E&O claim. So it's something that, and this is where I think the distinction comes from, is you want to do things the right way because it's the right thing to do for a customer. You don't want to do things in a certain way because it's going to limit your E&O exposure. Well, the most drastic example of something like that is, okay, I know a way that can guarantee you won't have any E&O claims, and that's to, unplug the phones, unplug your computer, and, turn off the lights, lock the doors, and never talk to anyone, and you won't have an E&O claim. Clearly, you wouldn't have any customers or be in business very long. But the example of that, or the point of that story, is you have to be able to, and you should be driven by the fact that I want to know everything there is possibly to know about a topic so I can be of benefit to my clients on it. And that doesn't mean you're not going to learn new things, or that courts won't interpret something in a novel way that hadn't been looked at by the industry. A kind of famous claim related to that would be with 9/11, a terrible, terrible time in our nation's history. And from a purely insurance perspective, there were two planes flowing into the World Trade Center, and the insurance company took the stance of that's one event, which limited their losses to, I think it was in the couple $1 billion range. And the landlord of the buildings had said, no, this is two separate planes, two separate events, two different times. My limits should apply on each specific basis. Always things going on, that life happens, and the interpretation then of that insurance policy will determine, okay, when something similar happens the next time, how will insurance policies react? So as a specialist, you should be devouring that type of information. And as you learn new things or learn how insurance companies interpret things, then that's something that you're going to be on that consultative approach with your clients on, to advise them, okay, here is how we need to set things up. Or also, insurance companies, the very first insurance policy was a single piece of paper that basically said, hey, this ship's sailing out from port tomorrow, and if it doesn't return in 9 months, then here's how this policy is going to pay out. And that was literally it. And there wasn't any exclusions, there wasn't any endorsements or anything, sublimits or anything like that. It was, hey, here's what's going to happen. Now our typical customer insurance policies is in the thousands of pages with different endorsements, exclusions, policy provisions, all this kind of stuff on there. The reason for those is insurance companies will say, ooh, we never intended to cover pirates. We didn't know that was going to, we just thought we were just covering, the boat sinking from the storms. So let's put an exclusion on for pirates or different things like that.
Yeah, yeah, yeah.
And now, again, we're thousands of pages later on different exclusions that happen. So it's important as a broker to be able to understand what those exclusions are, negotiate the ones that you have the ability to negotiate out, advise your clients on here's how this particular provision pertains to your business. And again, so that's all roles of a specialist, in things that someone, and really any broker, should be doing in any business. The benefit of specializing is it's difficult to get to that depth level in multiple industries.
Absolutely. And then don't even like get me started. Like when someone told me like there's exclusions, but then after the exclusions, there's givebacks and carve outs. And you're just like, what am I looking at? Like there's so many things to know with just a policy, right? I think the beauty of that first policy that was written, it was really the start of Lloyd's, was like the only way they knew that the ship was gone is that it never came back, right? Like that was sort of the simplicity of it stemmed from the fact that it never came back to port, but
Yeah.
or never showed up on the other side. So the
And now
world's just
most policies will have a mysterious disappearance exclusion on it. So that
right.
first shift wouldn't have been covered.
Exactly, exactly. In this case, and what kind of stemmed this was there's a current event, and we don't want to go into it in too much detail, but effectively, a broker had said, hey, look, I'm a specialist in this. And the reason that it got elevated to a news story was that they didn't define a term. I forget exactly what it was, but it was like, at what point does a customer's property become the property of the company doing the work, right? And so they didn't question that definition. And it's like, to me, there is some sense of like carrier responsibility too, right? It's like, should I have to question every term, every single thing in it? Or at what point do you trust the carrier? So I don't know. I just wanted to get your thoughts on that because there is sort of like, like we put faith in the carriers we work with just as much as we do our own expertise.
Yeah, and that's an interesting. So the specifics of that one was you had a warehouse company that was storing customer goods in it. They had coverage for customer goods, but only if they were legally liable for that loss. Meaning, like, let's say they drove a forklift into or backed up a forklift and it damaged a bunch of customer goods in that location. That would they would have been liable for that loss. In this particular instance, there was a weather event. I think it was a tornado or something like that that damaged everything in that warehouse, and the insurance company refused to pay because their customer, the person who owned the warehouse, wasn't liable for that loss. They didn't have any liability for that. Um, so to me, and then in turn, the broker got sued by the customer saying, "Hey, you're a specialist. You recommended this coverage to me." So in that case, I would fault the insurance company for but I'll back that up a little bit. Like anytime there's a loss, the first thing any adjuster is going to say is, "Okay, send me the contracts. What were you responsible for?" And if the warehousing company had a contract with the customer that said, "Hey, we got your stuff. We'll take care of your stuff. We're responsible for insuring it from any type of loss." To me, that would trigger liability. That you're saying, "Hey, I'm responsible for this. And even though the tornado wasn't in their fault, they were still responsible for insuring those goods." So what I would have done there is look at the contract between the warehouse and the customer, look at the terms of the insurance policy, and make sure that things were programmed correctly on that. For coverage like that Bailey coverage, which is when you're holding someone else's property, it can apply on a legal liability basis, which is the less expensive one. It can require on a direct excess basis, meaning that we'll cover it, but only if there isn't anything else that can possibly cover it. Like, so if there was a loss, they'd say, "Hey, customer, do you have coverage for it?" And the customer would say, "No, it's your guys's." They'd say, "Okay, we cover it." Or you can have it on a direct primary basis that says, "Hey, it doesn't matter if anyone else has coverage on it. We're going to be the first ones to pay." So again, as a broker, they should have looked at that contract that was in place, and then they should have programmed the coverage correctly on that. So hard to say because just reading the news article if those two things happened or not. But the argument of, well, you're a specialist, I think to me that's more the customer's attorney kind of piling on more reasons on to kind of pressure to get a settlement on that. So
Okay. Great. Yeah, good way to think about it. Your technical knowledge is like it's next level. That's why I love talking about these things. It's I think interesting. I think you made the comment, or it might have been Bill. He was like, "You're going to learn so much about insurance over the next couple of years. Like, eventually, you're just going to want to crawl up in a fetal position and hide under the bed because like everything's going to scare you."
yeah,
And I think because I was like, my son was super into BMX for like probably 2 or 3 years. He still is. And I'm like, I want to do like, I had some property. I'm like, I'm going to build like a BMX like course and have friends over, And it's like, as soon as I started thinking about the liability that I was like, no, like I'm gonna have to go. It's just too much work just to
yeah,
protect yourself. But really, I mean, at the end of the day, you can do great things out there and insurance is just to protect it. So,
yeah.
it's not as scary once you start to learn the intricacies of how it works and really what it takes is not that bad. So
It
anyways,
just was having a flashback. I don't know if you know the movie Pulp Fiction.
yes, yeah, yeah,
But if I was your insurance agent and you told me how you're building a BMX track in your backyard for your son and his friends, it would have been the scene where I forget the actor's name, but he's like, "Are you calling me on a landline right now?" And he's like,
right.
"I don't know you, prank caller," and hangs up the phone to distance himself from that conversation.
To
Yes,
go watch that now. That's a great movie.
a brilliant movie, Quentin
Yeah,
Tarantino.
he's got some good things, good stuff. Man, I could go into movie lore all day long. That's for sure. So, all right. Well, I think we'll wrap things up here if that's all right, and we'll get after it. Thank you guys for listening to us, and again, your comments and questions, and just we like to see what you're interested in hearing as we kind of figure out our way through this. So, thanks for being here, and we'll see you again next week.
Thanks, Peter.